In this presentation, we will discuss revenues as it relates to healthcare organizations, starting with service revenues. We have patient service revenues, which could include fees for patient service. We have resident service revenue, and that's going to be something like rental fees in an extended care type of facility. And then we have premium revenue from capitation fees. These are fixed fees paid periodically, no matter the service provided by the HMO. So note, when we think about the health organizations, the types of revenue and the different types of payment structures can be quite confusing, quite complex. We might get paid simply for the services, we might have some type of rental fee, and we might have some kind of fixed fee based on the service, no matter how much of the service basically was provided. The fact that we have those different types of revenue streams can make the revenue recognition process and the cycle of the collection and revenue recognition a bit complicated. Obviously, if we add on top of that the different types of payment providers that would be out there or where we're going to get paid from, either the client or some type of third party, which would be obviously insurance or some type of government organization possibly, also adds to the complication. Contractual adjustments or allowances. The contractual adjustments is a contra revenue account for the difference between the gross patient service revenue and the negotiated payment for third-party payers. So oftentimes we will have to have some kind of adjustment that will be recorded. So we can imagine a situation where we have recorded something to revenues and then there's a contractual adjustment, in which case we're not going to decrease the revenue if it was adjusted down, so that we're not going to be receiving as much as we had previously recorded in revenue, but rather and instead, we will be recording a contra revenue account. So instead of decreasing the revenue for the adjustment, we will then make a contra revenue account, which in essence acts like an expense, goes up in the debit direction, bringing what would be similar to net income down. Third-party payers. Now, third-party payers are usually going to be paying with regards to or in alignment with a contract. We have third-party payers could include, and these are going to be paying us, obviously third-party payers that are paying us a form of revenue on behalf of a client. That could be something like an insurance company, a healthcare provider, a government agency. Third-party payers make payments based on allowable service costs for medical procedures. Payments are not based on the length of the patient's hospital stay or the actual costs of the services rendered. Charity service. What are we going to do about charity service? This is going to be an important point for many kind of medical type of organizations, given the fact that when we have someone that is in need within a medical type of service facility, we want to be able to provide care to some case and provide some format, some level of charity care depending on the type of organization that we are running. Charity services are services to persons with a demonstrated inability to pay. So there's a demonstrated inability to pay, therefore charity service. Obviously, the question then for us is, do we record anything for charity service? There's not going to be any payment on it, although services were performed. What do we do for the bookkeeping side of things? Charity care is provided by both government and not-for-profit healthcare organizations. So in other words, it's expected to some degree that there's going to be some level of charity care, typically if it's a not-for-profit organization or a governmental type of healthcare organization. Charity care is not recognized as revenue or receivables or bad debt expense. So if we have the charity care, you might be thinking, well, maybe we would put it in there as revenue and then record the other side basically as an expense or something like that, or bad debt expense. Obviously, it's not going to hit the receivable account because we're never going to get paid in the receivable side. In this case, we're just simply not going to record it, in other words. So the charity care is not recorded as revenue or services or bad debt expense. Management charity care policies and level of charity care provided should be disclosed. And if we jump back up here, when I say we're not going to record it, in essence, we're not going to be recording the revenue side of things or the receivable side of things or recording some type of bad debt, which in essence would be reducing the revenue side of things. If we have some expenses with regards to the charity care, we used up supplies and this type of thing, then on the expense side, we would have to record the depletion of the expenses. Other revenue and support. We have auxiliary sales, so these could be things outside of basically our medical type of operations. If we have like a shop in our place, in our medical facility, that's going to be outside of our medical type of operations. We could have rental of facilities. That could be another source of income for us, again, outside of The medical type of operations, a different type of revenue, another source of revenue. Investment income and gains. So if we have investments in stocks and bonds or something like that, and we have income or gains on that, could be another source of revenue. Unrestricted contributions and grants. Unrestricted contributions and grants, another type of revenue.